So let's talk about what you can have in your real estate portfolio, whether an investor, a dealer of properties, and the distinctions associated. As an example, here's a snapshot of some potential tax differences. As a dealer, your tax could be $46,017. As an investor, it might only be $21,420. Now, Rick, what would be the difference between that? One is an investor, so we could be potentially be looking at long-term cap gains on something, right? If you're a dealer, this is active income. You're actually actively working in the business, right? So it's going to be taxed as ordinary income. Yeah. So guys, you got to be very careful, right? When you're talking about real estate, are you an investor in that real estate? Or are you an active trader? And what I see this all the time is people buy a house and they flip the house. Yep. Okay. If your intent was always to buy that house and flip that house becomes a cost of good that you're basically selling. That's going to be taxed as ordinary income. However, let's just say you bought a house and you decide to rent it. And you start to rent it and you maybe rent it or fix it up and you hold on to the property for a year. You're not too successful in the rental. Well, your intent was always to rent it. So then you'd have rental income, right? But then when you sell it, if you've had it for now over a year, you've now changed your intent. So now you're an investor. It becomes capital gains at that point, and it's going to be taxed at 20%.
Yeah.
So it's all about your intent, guys. Okay. Look, we know, the IRS knows, everybody wants to be taxed as an investor. But if you don't set things up properly, it's real easy for the IRS to come back and bust those transactions.
Yeah.
So be very careful.